Well, what is going on out there? Luke here today, and I want to talk to you about the beaten down dogs that seem to be going nowhere, like NIO and Palantir and other favorite stocks of ours. Is it time to sell and do some tax harvesting, which I'm currently already doing? But more importantly than that, I will give you a simple, quick 3-step process to always buy low and actually let you take advantage of the market instead of having the market take advantage of you. So please hit that like button and subscribe to this channel if you like the truth without the hype. And don't forget to get your completely free download, my stock investing checklist, to help you out. And the Black Friday sale is live now for the Market Insiders private group, so you have the group to lean on before making the fatal mistake of panic selling a great stock like Palantir, and instead show you how to learn valuations, planning, and avoiding emotions in your investing. So if you want our buy and sell alerts, plus 4 free courses, live weekly Q&As, exclusive videos, and a ton more, check out the pinned comment. And before blasting me for promoting it, I have no ads, no sponsors. This is what YouTube pays me in a month, and I give half of that and half the group's proceeds to charity. So some stocks are clearly selling off and have been for some time now in some cases. And I know there are many people out there where their whole portfolio is devastated right now outside of a stock or two, or maybe even no stocks. So they're completely devastated on every stock. Now sure, Palantir is approaching sub 20s yet again, and NIO has been bouncing above and below $40 for what seems like an eternity now. But there is more to this than meets the eye, and bear with me while I lay out this example to help out. Now, I'm not bragging here, I'm just laying out a full picture that will make sense in the end, and will show you how the 3-step process plays out when you execute the strategy properly. Now, we were buying Palantir at $16, $17 back in May, and we were buying NIO this summer at $31. And we bought Apple at $116, and it's now over $160. And we bought Tesla in the $600 range, some people bought it in the $500 range, and now it's up over $1,000. And a bunch of our members bought Nvidia and a bunch of other great stocks that are now up huge. So what, you may say, this wasn't helpful at all. Well, hold on just a second now, hear me all the way out. In every one of the scenarios we just talked about, the market was at peak fear with those stocks specifically when we bought. Not the entire market, not at the same time, but there was an intense fear around each of those stocks individually for one reason or another at various times. So that means when I see a market like this where so many of our favorites are trending down with no end in sight, and there's a ton of fear and a ton of noise around it, I smell massive opportunity that will put me in a position just like I am today, where I don't even have to consider selling NIO at this current level to do a tax loss harvest because I'm up 30% or so just on that buy. And furthermore, right now it is almost the exact opposite of last year for many of the stocks we just talked about. Now let me explain what I mean here. Last year when Palantir was at $40 and Lucid was at $60, I was busy buying stocks like Apple at $116 as we just discussed. And then this summer when Apple was at all-time highs, I was not buying any Apple, but I was buying Tesla in the 600s instead. And today I have no interest in buying Apple or Tesla right now. Now, don't get me wrong, I will be a buyer again, but just not today. However, I'm instead buying Palantir, Lemonade, and others who are now just beaten down, and I'm going to continue to buy those. Right now, there is a ton of fear around those stocks, just like there was with Apple, Tesla, and other stocks earlier this year that are now riding high. Now, can Palantir, Lemonade, or DraftKings, or NIO, or any of the others that I'm buying go lower? Of course, but that was the same question being asked of Teslas and Apple. And with Tesla, guess what? It did fall further, and we had people in the group that were able to pick up shares in the $500 range. But my buys in the $600 range are looking really pretty now that Tesla is broken out. But shortly after I bought the stock, it inevitably dipped lower after I bought, because that always seems to happen after I buy. I mean, seriously, it's a running joke in the Discord, but I'm very happy now with my buys just a few months later since I'm up almost 100%. Now I'm sure this will all change again, and the stocks that I'm buying right now will be on a huge run up, and I need to focus on other stocks that are beaten down. So how do you do all of this? Well, here are the 3 steps to doing that. The first is do a proper valuation. How the heck do you know if a stock is overvalued and you should stay away from now, or undervalued in a complete steal? Well, you do a valuation on the stock, and there are many ways to do it, and click up here to see my video on this, but you can use any method. Discounted cash flows, ratios, it doesn't really matter as long as you are doing a valuation and not just following the hot stock tip of the day or YouTube video, or worst of all, chatter in the comments section. Doing the work up front will make spotting an opportunity much easier, but there is more to it than just doing a valuation. And second, You need to have a plan and then execute that plan. Create your plan when you have no emotions, so when a stock is falling or running up, you know your plan was rooted in analysis and not emotions. Put a price target you want to buy at. Decide how many shares you want to buy. Decide if you're going to buy them all at once or in increments, and decide the size of those increments. Decide on how long you want to hold that stock. Just create that plan and, just as importantly, execute when the time comes. A plan is worthless without execution, so you gotta execute. And the final step, and it's the hardest one to be sure, is to just be patient. It's hard not to buy a hype run when you want a stock and it looks like it's never going to come back down again and it keeps running huge. But valuation always eventually matters. So I know that and just need to be patient when a stock is running and clearly overvalued. But then it's equally hard to buy a stock when it's falling. Inevitably, you buy the dip and it keeps dipping, so now you are in the red with no end in sight. Will it be months until it recovers? Possibly years? The answer is nobody knows the answer, but as long as nothing fundamentally changes with the business and you bought at an undervalued price, just hold and be patient. The truth is, valuations always matter, and after doing this for 20 plus years, great companies and great stocks always provide great returns in the end. It just takes more time than we want it to, so patience is key. But let me know down in the comments if you are buying or selling any stocks. I would love to see what you are doing as we close out the year. So thanks for watching, and we'll see you in the next one.